Hello, and today's stock blitz is going to be on Cellular Goods. Cellular Goods are a AIM-listed company which develop beauty products which use CBD oil, which of course is all really cool because it's related to cannabis. They really provide an excellent anatomy of what can go with AIM-listed stocks when it goes terribly wrong. The share price is now more than 97% below the initial IPO, which was only in February 2021. Before I start this video, please remember that I do these videos just for fun as a hobby and always speak to a qualified investment professional before making any investment decisions. I'd like to say thanks to Steve Rogers, who's the subscriber who suggested I took a look at Cellular Goods. So Cellular Goods listed on AIM in February 2021, and they managed to raise 13 million. By December of that year, they'd launched their products, which was a mixture of beauty creams and also ingestible CBD based products. However, despite this, the share price had already dropped by about 64% a year into being launched on AIM. They were then hit in March of 2022 by a Food Standards Agency ruling, and this meant they had to withdraw all of their edible products. Only recently they released their annual report for the full year of 2022, and this showed that their product launch had been a complete disaster. They only achieved 29,000 in revenue versus running costs of 6 million a year. So this company has been a complete calamity, and it really is a very interesting lesson in what can happen with some AIM stocks and why you should be very careful before investing in a company that's IPOing on AIM. So if we take a look at their annual report, we get lots of nice tasty details about what went wrong. First of all, of course, they cover that the Food Standards Agency forced them to withdraw all of their ingestible products. They mentioned that even though their products are legal under English law, Facebook and Meta and these kind of people aren't allowing people to directly advertise using their platforms because of the cannabis connections. They also say that even though they went out as a proper company, the CBD market is completely cluttered with loads of niche brands and lots of mum and pup situations. There's lots of tiny operations set up in people's kitchens and stuff. And this then creates what they call fierce competition for people trying to do it properly. So they've ended up only making 30 grand in revenues despite 6 million of costs. And actually lots of the directors and stuff have resigned, and they've said that they're going to reduce their cost base by 56% in order to survive. We see here the directors' remuneration. They actually took in the best part of 800 grand in the last financial year. Here we see their statement of income. Yeah, we see here they've only made 30 grand in revenue. It cost them 11 grand to make the stuff, so that's only a gross profit of 18 grand in a year. And then the cost of running the business is 6 million, leading to may as well call it 6 million operating loss. When we look at this breakdown of their expenses, we see the directors pay here at nearly 0.8 million, and also they paid 0.9 million in consultancy fees, which really is quite remarkable, and they spent 1.9 million on promotion and advertising. So that really is quite shocking that they spent 1.9 million on advertising and that only brought in about 30 grand in sales. There's also 1.4 million in other expenses, and I couldn't find a breakdown of what that was anywhere in the annual report. We see that as well as the directors taking in 0.8 million in cash payments for their services, we see that their actual employees took in 0.65 million in wages. And that's only with 5 employees, according to this. So those employees are earning a lot of money, considering that these are the people actually functioning the business. And when I look at the inventory, that's interesting because they have 0.4 million of raw materials they brought in to make goods, and 0.3 million of actual finished goods ready to ship out. This leaves them with about 0.5 million of stock and raw materials for the stock, and yet they're only selling 30,000 a year worth of stock. So you really can see here the colossal difference between their ambitions and what they were actually able to sell. So just to look at it visually, they raised 13 million from IPO investors. It then cost them 3 million setting up the business in the first year end, and then they've only made 30,000 in the second year end, during which time they spent 6 million to achieve that 30,000 of sales. So they're now left with 4.4 million of cash, but their running costs are, from what I could make out from the annual report, are now 2.6 million a year. So they really have only got enough money to left a couple of years. Looking at how colossal the failure is of all that advertising spend, I just cannot see any way forward for this company. So I think this is a good example of what can happen with some stocks that IPO on AIM. Actually, the share price dropped 20% today, and that's because they had been talking about doing a reverse takeover with Canare Brands and Love CBD Health, where the management of these companies basically took over running of Cellular Goods. The current management of Cellular Goods would then walk away with substantial amounts of money and then just exit the whole thing. And then shareholders would at least be left with a company that had some chance of survival. These are already existing brands that have obviously done it the hard way, building themselves up from scratch rather than just raising an IPO on AIM. But then by doing this, the directors would enable, as well as a kind of nice exit for themselves, they would then at least leave shareholders with some kind of company that would have a good expectation of running as a going concern in the distant future, rather than the current situation where we've got serious danger of all the money running out and bankruptcy within only a couple of years. So that completes my look at Cellular Goods, a really good example of how dangerous it can be to invest on AIM listed stocks, particularly at the IPO stage. Of course, sometimes it can go right, and you can make spectacular gains from listing in AIM IPOs, but in other cases, as with here, it can go spectacularly wrong. So I hope you enjoyed the video. Play safe and good luck with your own investing.
Please read the disclaimer and remember that prices can go down as well as up.